As a part of the accounting activities, an accountant may be required to deal with different types of documents. Now, these documents which are used in accounting, they stand out as evidence. They act as proof for the different types of transactions which are carried out. Now, what are some of the important documents that we will be dealing with under accounting that we will be touching upon right now? So, some of the important documents that we will be dealing is cash memo, uh, invoice and bill, receipt, pay in slip, check, debit note, credit note, and then finally vouchers. So we will be discussing 8 important types of documents which will be used in a business. Now let's talk about each of this one by one in detail. The first document that we will be talking about is what is called as cash memo. What is cash memo? Cash memo serves as an evidence, or it serves as a document when a business carries out cash transaction. So whenever a business carries out some kind of purchase, or whenever a business carries out some kind of sales, and this transaction, the nature of this transaction is for cash. Please remember, whenever a business executes a transaction, they have two options. They can have the transaction carried out for cash, which means the payment will be settled instantly, or you can carry it out for credit. What happens in credit? Credit is when you would be making the payment later. Yeah, so it's something the best possible example that I can give you in this context so that you can correlate with the present scenario is when you order items from e-commerce websites. So in today, when you order items from e-commerce websites like Flipkart or Amazon, you have two options. Either you can go for a prepaid order. What is a prepaid order? You would make the payment upfront. So you may be either using your debit card, credit card, or your UPI net banking. You will be processing the payment. The product will be delivered to you. The second option is called as cash on delivery. So what is cash on delivery? Till the time the product gets delivered to you, it is on credit. Okay, the product has been shipped out to you on credit. Similarly, when a business carries out transaction, they have two options. The first option is the transaction can be carried out for cash, where the payment will be settled instantly. Or second option is that the transaction will be carried out for credit. In the case of credit, what happens is the payment will be settled at a later period of time. Okay, the payment will be carried out or will be settled at a later period of time. So the document which is used as an evidence for the cash transactions which has been carried out, that is referred to as a cash memo. Now, what are the possible informations that you can come across in a cash memo? Okay, what are the possible details that you would find in a cash memo? The cash memo would contain particulars, would contain the details of the item which has been sold. It may have the quantity, how many number of items has been sold, what is the rate. Okay, what is the rate per item, and what is the total amount? How much of discount have you received? In earlier times where we had indirect taxes, it would also contain details like sales tax, VAT, value add tax, etc. But in today's era, when all indirect taxes has been taken off and we only have GST details would also be mentioned in the cash memo. So please remember, cash memo, it serves as evidence for the cash transactions which has been carried out. Now, once the transaction has been executed, what happens with the cash memo? The cash memo is being passed on then to the accounts team. Now, probably what would happen is the transaction that is taking place, it need not be executed by the accounts team. It could be executed by some other department of the organization. It could be by the production team. It could be by the market team. It could be by the sales team. So whichever team is executing the transaction, what will happen is they will carry out the transaction. And once the transaction has been carried out, they will be collecting the cash memo. Now, this cash memo is then passed on to the accounts team. So once the accounts team receives the cash memo, what will happen is, based on the details which has been provided in the cash memo, the accountant will go about entering the transaction into the books of accounts, namely journals and ledgers. So the cash memo serves as an evidence for the cash transaction which has been carried out. So once the accountant receives a cash memo, based on the details which is mentioned in the cash memo, the accountant will pass the entry. They will pass the entry into the books of accounts. Now, once it has been entered into the books of accounts, the accountant will later file the cash memo. Okay, he will store the cash memo in a secure place so that it will act as an evidence. You see, after the cash memo has been entered into the books of accounts, it has to be retained. Okay, because at the end of the financial year, there would be a statutory audit which would be carried out by a appointed auditor. So when the auditor comes down, the auditor would be physically verifying this cash memo. Okay, they will be physically verified. So the cash memo has to be retained by the accounts department so that later it can be produced if at all there is an inquiry or if at all the details are being sought after. So cash memo, it serves as an evidence for the cash transaction which has been carried out, and it will be retained by the accountant. Now, I'll share with you an example of a cash memo. So this is how a cash memo looks like. So if you look over here on this, what I've shared, it has the name of the establishment, the particulars of the establishment. Also, you would see that here the description is being mentioned. So description talks about the details of the transaction that has been carried out. What was being sold? What is the rate at which is being sold? You'll also see that it has got the quantity and the total amount gets mentioned over here. So this is typically how a cash memo would look like. So please remember, cash memo, these are documents which are used for cash transactions which have been carried out by the business. The next document that we would be learning together is the invoice and the bill. It is invoice and the bill. Now, sometimes these terminologies are used interchangeably, but it refers to one and the same. Now, what is the purpose of an invoice and a bill? Invoice and a bill, these serve as documents for the credit transactions that has been carried out. Now, what is a credit transaction? Credit transaction is you're executing the transaction right now, but the promise, the commitment, the obligation to settle the payment would be on a later date. So, for example, I would be going to a particular shop and let's say I'm purchasing some stationery. But the stationery I'm purchasing on credit and I'm informing the stationery business, I will settle the bill after that month. So I will get the stationery items today, but the amount against these items I will be settling after 1 month's time. That is what is referred to as an invoice and a bill. So invoice and a bill, unlike cash memo, these are used to support credit transactions which has been carried out. Okay, these have been used as documents for credit transactions which has been carried out. One major drawback that you may face is that you may get confused with the colloquial terms that we may be using today. Today, any kind of acknowledgement that we get when we carry out a bill, when we carry out a transaction, we refer to that as a bill. Okay, but from an accounting perspective, please remember cash memo is strictly for cash transactions. Invoice and a bill is for a credit transactions. Also, what happens is whenever the invoice and the bill gets prepared, usually the point at which these are prepared, they would be preparing multiple copies. So some of us may have had personal experiences where we would be walking into shops and we would see they would be placing carbon papers and then they would be writing down the details. Now, why exactly is the shopkeeper doing this? That is because they're preparing multiple copies of the same document. Okay, they're preparing multiple copies of the same document. So usually when an invoice or the bill gets prepared by a business, they would provide the original copy to the person who's engaged in the transaction. Okay, they will issue the original bill to the person who's engaged in the transaction. Then the multiple copies which have been prepared, especially one duplicate copy would be retained by the business so that this duplicate copy gets passed on to the to the accountant, to the accounts department, and they would go about preparing the books of accounts based on the duplicate copy which has been provided. So please remember, invoice and a bill, it is used for credit transactions. Multiple copies gets prepared, and when multiple copies gets prepared, what happens is the original copy gets issued to the person who's carrying out the transaction. The duplicate copies would be retained by the business, and the duplicate copies gets passed on to the accounts team so that the accounts team can prepare their transactions based on the duplicate copies which has been provided to them. Okay, so this is about the invoice and the bill. Now, let me show you a sample. Here is a sample of an invoice, which pretty much looks very similar to the cash memo. It is very much similar to the cash memo. But one difference over here is that in cash memo, we were not capturing the details of the person to whom we were carrying out the transaction. That is because since the payment is taking place, since the payment is being settled for cash memo, it is not required to capture that. But here, since a bill is exclusively prepared for credit transactions, it is mandatory for us to capture the detail of the person with whom you're carrying out this particular credit transaction. So in this case, if you notice, John Pains is the business who's carrying out this credit transaction, and the party with whom they are engaging in this transaction is Harjeet and Sons. Okay. So Harjeet and Sons is the person with whom they are getting into for this particular transaction. Okay. So this particular bill gets issued to Harjeet and Sons. So what happens is the original bill will be issued to Harjeet and Sons, and the duplicate copy would be retained by John Pains. Again, here, say very similar to cash memo, it has got the details of the transaction, so quantity, particulars, rate, and total amount, and then this gets issued. So just like cash memo as well, the invoice may be prepared by the person who's executing the transaction. That always, or that need not be the accounts team. It can be sales, it can be marketing, it can be any team who's participating and who's carrying out the transaction. Once the transaction has been carried out, the details would be later. The original copy would be issued to the person with whom you're carrying out the transaction, and the duplicate copy would be retained. Okay, so that is about invoice. Now, the next document that we would be studying is receipt. Okay, so what is receipt? Now, receipt is a document which is used as evidence document for making any sort of payment. Okay, so when you make any sort of payment, a receipt gets issued. Now, please remember, when we spoke about cash memo and receipts and bills, invoice and bills, what they were specific to sales and purchase transactions. Okay, so that was specific to sales and purchase transaction. But receipt is not like that. Now, your business may be carrying out transactions apart from sales and purchase as well. So, for example, you are a grocery store. For some reason, your computer stopped working. You had to call in a technician. You had to call in the expert. Okay. Now, the expert is coming. He's doing the check on your computer. Some parts has to be replaced. He's done all that work. Now, you have to make the payment. So for such kind of transactions, what will happen is you will be collecting a receipt. Okay, so you will be collecting a receipt. So what happens in a receipt is usually used as a document whenever you are making any sort of payments. Okay, whenever whenever you're making any sort of payments. Usually, the receipt would be issued by the person who's collecting the cash. Okay. Receipt would be issued by the person who's collecting the cash. So, for example, let's say we had some appliance at home. Let's say our refrigerator broke down. You had to call in the technician from the company. The technician came and carried out the work. And after carrying out the work, he's telling you the cost of the work he's carried out is 1,500. So the moment you pay 1,500 to the technician, he will be issuing you a receipt. Okay, so that receipt acts as a proof for the transaction that you have carried out. Now, very much similar to the concept of bills, in the case of receipts as well, multiple copies would be prepared. Okay, multiple copies would be prepared. The original copy would be issued to the person who is carrying out the transaction. Okay, so for example, you're making the payment, you're giving the money to the company will issue the original receipt to you. The company will retain the duplicate copies. Again, the duplicate copies will be passed on to the accountant. So the accountant will go about will be going about passing the transactions based on the duplicate copies which has been received. Okay. So now what kind of information would be captured in a receipt? Receipt would have date, particulars of the transaction, amount of the transaction. So these are the generic details which you'll be coming across in the case of receipt. So receipt acts as an evidence for the transaction that has been carried out. Just like bills, just like an invoice, what happens is multiple copies gets prepared, and these multiple copies of the original copy gets issued to the person who's carrying out the transaction, and receipt will be issued usually to the duplicate copy would be retained by the company. Now you may have a doubt, how is cash memo bill different from receipt? So I've already explained this to you. Cash memo, receipt, bills, these are usually issued for sales and purchase transaction. Any other transactions apart from that, you will be handling or you'll be carrying out that with the help of a receipt. Now let's look at a sample of a receipt. So this is how typically a receipt sample would look like. So on top, it will have the name of the company which is collecting the transaction, and then here it says receive with thanks. Okay, so the person from whom you're collecting the payment, okay, their details will be mentioned over here. On account, okay, for what detail, what was the particular, what was the purpose for which you have carried out this particular transaction. So that detail will be mentioned over here. And then it will also have the authorized signature. Okay, it will have the authorized signature. So this is typically the sample of a receipt. Okay, this is typically the sample of a receipt. So receive with thanks from Mr. and Mrs. The person who has carried out the transaction, and what was the purpose for you to carry out the transaction, that gets captured over here, and then it gets issued. So this is typically how a receipt sample would look like. The next document that we will be dealing or we will be learning is called as Payin Slip. Now, what is a Payin Slip? Payin Slip is a document which is filled usually by the accountant whenever they have to carry out any kind of deposits at a bank. Now, every business would be maintaining a relationship with a bank. They would be having a bank account. Now, the reason why the business would be maintaining a bank account is to facilitate transactions. Okay? They would be maintaining a bank account to facilitate bank transactions. So let's say the business has received a lot of money. It may not be very safe for the business to retain that huge amount of money with themselves. So instead of maintaining that huge amount of money with themselves, what they would be doing is they would be taking a certain portion of the money, going to the bank and depositing the money. So while carrying out this deposit, the document which is used to facilitate, which is used to carry out this particular transaction, that is referred to as a Payin Slip. Okay, that is referred to as a Payin Slip. So Payin Slip, it serves the purpose of providing an evidence for the cash deposit which has been carried out. Okay, it serves as a evidence for the transaction which has been carried out. So that is what is referred to as a Payin Slip. So whenever the business wants to deposit some money into the bank, what the bank would be doing is the bank would be carrying that out with the help of a Payin Slip. So the Payin Slip, usually what happens is it gets filled out by the accountant, because the accountant would be the person who would be usually carrying out the transactions with the bank. They would fill out the details into the Payin Slip, go to the bank, and then carry out the transaction. Now, when they carry out the transaction at the bank, what will happen is the Payin Slip will have two parts. Okay, so one is referred to as an acknowledgement section, and the other is the original copy. So the original copy would be retained by the bank. The acknowledgement would be signed and sealed by the bank and handed back to the accountant. Now, this acknowledgement will serve as a proof for the cash deposit which has been carried out. Just like any other document, this Payin Slip would also be filed by the accountant as evidence for the cash deposit which has been prepared. Now, let me show you a sample of a Payin Slip. So this is a sample of a Payin Slip of State Bank of India. If you notice, like I had mentioned earlier, the Payin Slip has got two parts. Okay, the Payin Slip has got two parts. In this part, this is referred to as the acknowledgement section. Okay, the one on the left hand side, that is referred to as the acknowledgement section, and the other side, this is the main part of the Payin Slip. So this is the place where you would be filling in the particulars. Okay, you would be filling in details. So here you would be mentioning the account number, name of the account, what is the total amount, denomination breakups would be given over here, and then it will be signed and sealed. Then similarly, the acknowledgement part, what will happen is you'll be filling in all the details, name of the name on the account number, what is the total amount, particulars of the transaction that you carried out. Once you produce this at the bank, the cashier at the bank would sign and seal this. The acknowledgement section would be handed over. The main part of the Payin slip would be retained by the bank. Okay. So this acknowledgement would be filed by the accountant in the business. So it serves as a document, serves as an evidence for the cash deposit which has been carried out. So this is a Payin slip. The next document that we would be learning as a part of the documents around accounting is cheque. Now, checks usually serve as channels of carrying out transactions on your bank account. In today's modern era, we may be familiar with options such as IMPS, NEFT, RTGS, UPI, etc. But much of the business scenario, the transactions that would be carried out by the business, it would be usually with the help of cheque. Now, cheque is an instrument which is used to facilitate the payment. Okay. So cheque is an instrument which is used as an instrument to facilitate the payment. In fact, the cheque has got a legal validity. Okay. The cheque has got legal validity under the Negotiable Instruments Act of 1881. So this is also the reason why, since it is a legal document, cheque bounces are considered as legal offenses. Cheque bounces are considered as legal offenses. Now, we all must have seen cheque. In the case of businesses, what happens is the cheque would have an authorized signatory. Okay, so the business would nominate authorized signatories against the bank account with the bank. So only those people would be designated to sign checks. Okay, only they would be designated to sign checks. So once the cheque gets signed, what will happen is the cheque would be issued to the person to whom the payment has to be would be fair. Now, usually these days we come across printed checks. So in printed checks, what happens is some of the details such as name of the business, account number, details of the bank where you hold the bank account, all that would come pre-printed. Okay, so only the pay section and the particulars, that especially the amount part, has to be filled. Okay. Now, also please remember, in the case of business, the businesses, only authorized signatories are entitled to sign checks. So, for example, let's say I'm an authorized signatory of a particular business, then I would be the only person who would be authorized to sign the check. Apart from me, other people would not be allowed. Other people will not be authorized to sign checks. So that is what happens in the case of checks. So please remember, check is an instrument which is drawn upon a banker, and then when the check is produced at the time of a transaction, the payment which is mentioned, the amount which is mentioned against a check, it has to be released. Now, checks can be of two types. Okay, you have what is called as account payee checks, and then you have open checks. Now, what are account payee checks? What are open checks? Account payee checks, they are also referred to as cross checks. So what happens in a cross check is it will look like this. It is just like a normal check. However, the corner part, it will have two lines which will be drawn like this. It would have two parallel lines which will be drawn like this. So what happens in the case of an account payee check? In the case of an account payee check, the name of the person who's mentioned against the check, only that person is authorized to encash the check. Only that person. So for example, if I say John Thomas, pay John Thomas, then only John Thomas can encash this check. Other people will not be allowed to encash the check. So that's what happens in the case of a cross check. The second sample that you see on the sample section, this is called as an open check, or it's also called as a bearer check. So a bearer check can be encashed by anyone. It can be encashed by anyone. Okay, so between an open check and an account payee check is more secure. Okay, account payee check is more secure. Now, one drawback with account payee check is that the person to whom you are planning to carry out the transaction, you must know their name in advance. You must know their name in advance. So that's what happens in the case of an account payee check. So please remember, checks, these are negotiable instruments. These are instruments which are used for facilitating transactions. The next document that we would be learning as a part of our documents used in accounting is called as a debit note. Now, debit note and credit note, these two documents go hand in hand. Okay, these two documents go hand in hand. Whenever a business carries out a sales purchase or a sales transaction or a purchase transaction, what happens is there might be a possibility that they can carry out return. Okay, there is a possibility that they can carry out return. So what is sales return? Sales return is you bought something, you're not happy, you're returning it back. That's called as a sales return. Purchase return, okay, you purchase something, you're not happy with it, you're returning it back. That is called as a purchase return. So sales return is you as a business, you sold something to your customer is not happy, they're returning the good back to you. That is sales return. Purchase return is you bought something, you're not happy, you are giving the product back. That is called as purchase return. So here's an example. Let's say you bought a product from Amazon. Now, after buying the product from Amazon, you're not happy with the product. You want to return the product back. Okay, so for you, it is a purchase return. For Amazon, it is a sales return. Okay, you are returning the product back to Amazon. So for you, it is a purchase return. For Amazon, it is a sales return because they sold you the product. Now you are not happy. You are giving the product back. So for them, it is a sales return for them. Now, debit note is a document which is prepared when you want to return a product. Okay, when you want to return a product. So when you return the product back, you will issue a debit note. Okay, you will issue a debit note. Okay, so what happens is you will give a debit note to the supplier. Okay, so that you can get a refund on the money. Okay, you can get a refund on the money. Okay, so that is what is referred to as debit note. Now, simple way to understand a debit note is from e-commerce websites. Whenever you raise a return request, okay, whenever you raise a return request, that return request is a debit note. Okay, that return request is a debit note. Okay, so a debit note sample looks something like this. It has name of the establishment, debit note, and then particulars. Now, for you to understand the debit note better, you must also understand the credit note. Now, credit note is again a document, okay, which is used in the case of sales and purchase return, but credit note is issued when the business to whom you have initiated the return, when they receive, they will issue you a credit note. Okay, so let's go back to that online sales return example. You raised a return request with Amazon. Your return request is a debit note. Then what Amazon will do is Amazon will send one of the representatives to collect the product from you. When the representative reaches your location, when they collect the product from you, they will be giving you an acknowledgement. Okay, they will be giving you an acknowledgement that they have received such and such item from you. It is worth such and such item. That acknowledgement that that person is giving you, that is referred to as a credit note. Okay, so whenever you carry out a sales return and a purchase return, please remember debit note and a credit note, both are used. Debit note is prepared by the person who is initiating. Credit note gets issued when the company receives the product back. Okay, so that is what is referred to as a credit note and a debit note. So debit note and credit note, these goes hand in hand. Debit note gets prepared by the person who's initiating the return request. Credit note gets prepared by the person who's receiving the return request. So here's a sample. So here's a sample of a credit note. So credit note was prepared by Smith and Company. What they have done is they have prepared a credit note to Amrit Singh and Sons. So what we have to understand is Amrit Singh and Sons, they have bought something from Smith and Company. They're not happy with the product. Now they're returning the product back. So once Smith and Company receives the product from Amrit Singh and Son, they will be issuing this credit note. Okay, they will be issuing this credit note. So that is what is referred to as a credit note. So please remember, debit note and credit note, they both go hand in hand. Debit note gets issued by the person who's initiating the transaction. Credit note gets issued by the person who's receiving the. So these two go hand in hand. The last document that we have to learn as a part of the documents in accounting, that is referred to as vouchers. What are vouchers? Now, vouchers are usually documents which are prepared for collecting. These serves as proofs for any kind of transactions apart from the ones that we had earlier mentioned. So, for example, you are making a payment to someone. Okay, so you will be collecting a voucher from that person. Okay, so any transactions apart from sales and purchase that you're carrying out, that you will be facilitating with the help of a voucher. Okay, so voucher is a document which is you will be preparing for facilitating any kind of transactions apart from sales and purchase. So we've learned 8 important types of documents: cash memo, we've learned bills and receipts, we've learned we've learned Payin Slip, we've learned debit note, we've learned credit note, we also learned vouchers. So these are some of the important documents that we will be using in accounting. I hope all of you found these documents beneficial.